Hey everyone, Coach Investor back to another video for today. So let's go over Unity's earnings report. You probably have noticed that the stock is up around 10-11% or so during the day. Why is that? Well, because the numbers were much better than expected. The stock has been going down for a while. Of course, the current macroeconomic environment has hurt the business as well. We've had the merger with ironSource, which by the way is a huge boost to the overall business, especially the profitability of the business. We're well on track to reach those profitability goals that they set out. Now, currently, the stock is trading at around 4 times 2025 revenues. Of course, that's only if the company continues to execute. We're going to see a lot of growth this year thanks to the merger with ironSource, but projections for growth in the year ahead is also over 20%. So maybe that's one of the reasons why the stock is up. Of course, they did have to mention in the earnings call and in the report as well, they talked about generative AI. No surprise there. But with regards to Unity, I think this is going to be a huge boost to their business. Because thanks to AI and AI tools, more people, more creators will be able to, you guessed it, create stuff. Whether it's games, applications, digital twins, etc., etc. Where do you build it? Well, upon arguably the most popular platform out there, which is Unity. Of course, you also have Unreal Engine, two great companies, two great platforms to build upon. But with Unity, they did give us a bit of a summary, a bit of a story around generative AI, etc. So I'll try and summarize it as quickly as possible. So Unity believes that AI will be beneficial to their growth and profitability. They have 4 sustainable competitive advantages: the Unity editor, the Unity runtime, the Unity network, and their data advantage. Now, Unity's editor workflows and toolset for creating real-time experiences is widely adopted, and AI technologies accessed from inside the Unity editor will enable creators to be more productive and expand the total numbers of creators. As for runtime, that transforms content into being real-time and interactive. And Project Barracuda brings an inference engine, an important part of generative AI capabilities, to the Unity runtime. Unity's analytic tools and ad networks, publishing systems, and cloud services reach more than 4 billion devices. Unity can train algorithms for full 3D worlds and the underlying instructions that create them in real time, making it far more useful than training on just the language or visual output. So there you have it. You don't have to read all of it. Just listen to this short summary, which by the way was summarized by an AI tool. The more you know. Anyways, before I continue with this video, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And you want to support me even further, check out the link down in the description and in a pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. And don't worry, the video about Twilio will come out tomorrow on Friday before the market opens. Alright, so for this quarter, revenue was $500 million, up 56% year over year and down 2% on a pro forma basis. Of course, with ironSource, this was expected. The huge difference between both numbers. They also exceeded their own guidance. Now, they say here for the balance of 2023, we expect revenue to grow faster than the markets in which we compete, with steady and meaningful continued progress on profitability. Now, when it comes to different segments, so the Create Solutions in the first quarter, revenue reached $187 million, up 14% year over year. Now, given that the strategic partnerships is now also included in this segment, revenue is impacted by the timing of large deals. We're also providing our Create Solutions revenue excluding strategic partnerships, which was $170 million, up 17% year over year. They say here they expect Create Solution revenue to accelerate throughout the year behind the Edition price increase, adoption of digital twins, and acceleration in China. As for the Grow Solution, revenue was $313 million, up 101% year over year and down 9% on a pro forma basis, compared to strong COVID-elevated performance in the first quarter of 2022. This year, they expect Grow Solution also to accelerate throughout the year, mainly from share gains as we apply best practices, capabilities, and data between our ad networks. For example, we are transitioning the ironSource ad network to the more advanced Unity machine learning AI model, and the Unity ad network is adopting ironSource bidding models. Now, as we move to execution and the profitability of the business, there are a few steps that they are taking. So first, they are reducing approximately 600 roles, or 8% of their workforce. Secondly, they are reducing the number of managerial layers to make us more agile and effective, something we've seen with Meta as well. And third, we are reducing the number of Unity offices over time to concentrate people and teams together and make it easier to collaborate and solve problems for our customers. Logical steps to make, like we've been saying for the last couple of months, doing more with less is the theme of 2023. Now, as we look at guidance, they expect revenue to come in between $510 and $520 million. That's an increase of 72 to 75% year over year, or 6 to 8% on a pro forma basis. Their assumption is that the ads market will be relatively flat quarter over quarter, and that we will continue to gain share and perform ahead of the market. Now, as for adjusted EBITDA, you can see here a significant increase in profitability compared to last year. Now, as for the full year, they are taking into account the stronger than expected first quarter and the ongoing uncertain macroeconomic environment. We are increasing the low end of our revenue by $30 million and the low end of the adjusted EBITDA guide by $20 million. They remain committed to the goal to reach $1 billion in adjusted EBITDA run rate by the end of 2024. Now, before I conclude, there is one thing that bothered me, and this is something I don't think they touched on the earnings call unless I missed it. If you did hear something, let me know down in the comments below. And that's this right here. So dollar-based net expansion rate has been coming down again for the last 2 years. We had seen some improvements in Q4, but this time again has fallen quarter over quarter, year over year as well. We're now at 107%. But not only that, they lost 18 customers this quarter. So what exactly happened there? To be honest, I don't know. I haven't really heard anything during the earnings call. Nobody really asked that question. I don't know why, but okay. Now, overall, on a GAAP basis, the company is far from being profitable. If you look at stock-based compensation expense, yes, it is down quarter over quarter. Of course, we still have a huge increase here year over year of about 60%. Now, if we look at the graph before the earnings report, we were the same area we were back in March, back in January, and in November. So I would say that this area right here around $27, $28 is a sort of support line. Then previously we were hit by that resistance at around $40. Right now we had a big green candle because of that earnings report. Let's see what happens in the coming weeks as the 200-day moving average comes down and maybe the stock continues to go up. We might test that 200-day moving average, see what happens, of course, in the overall market. Will interest rates continue to go up or not? That will certainly impact a company like Unity. So overall, a solid report for Unity. Of course, I would have loved to hear more about that loss in customers and especially the dollar-based net expansion rate coming down closer to that 100%. You do not want to see this below 100%. Overall, that's about it for this quarter. Of course, do share your thoughts down in the comments below. What did you think about this quarter? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.